Vietnam market update, July 2025. Market performance. The VN Index maintained its upward momentum in July, rising 9.2% month-over-month to close at 1,502. This brings a year-to-date return to a solid 18.6%, driven by a strong wave of local money flow and the return of foreign investors as net buyers. Average daily trading value hit a record high of $1,337,000,000 a 66.5% increase compared to June, and nearby double the level seen a year ago. Foreign investors net bought $298 million in July, a major turnaround from June's modest net sale of $44 million. Sector highlights. Almost all sectors posted gains in July, with standout performances in industrials, real estate, and financials. The only sector that had a negative return was consumer discretionary. Industrials, Jelex Group led the way, along with major airline players like Vietjet and Vietnam Airlines. Real estate, Vingroup and its affiliates were key drivers of growth. Banking, private banks such as VP Bank, SHB, and HDB, as well as state-owned giants like VietinBank and Vietcombank performed well. Brokerage, investor interest in digital assets remained high, with SSI in the lead and VIX gaining attention as an emerging player. Consumer discretionary, Vinper weighed down the sector's performance. Macro commentary. Vietnam's July macro data remained resilient despite U.S. tariff uncertainty, with the government raising its 2025 GDP growth target to 8.3 to 8.5%. This requires sector half growth of 9 to 9.4%, above the first half's 7.52%. Industrial production rose 8.5% year-on-year, led by manufacturing at 9.3%. The S&P Vietnam Manufacturing PMI climbed to 52.4, its first expansion in 4 months. Exports grew 16.6% and imports 18%, producing a $2.3 billion surplus in July and a year-to-date surplus of $10.2 billion. Higher U.S. tariffs on Indian goods may give Vietnam a competitive edge, though the 40% duty on tranship goods remains a risk. FDI disbursements rose 9.9%, while registered FDI fell 4.6%. Retail sales grew 9.2%, supported by stronger retail trade and tourism. Fund tax reforms could boost consumption. Public investment surged 34% in July. A draft decree to revive fuel transfer contracts could further accelerate infrastructure growth. CPI rose 3.19% year-on-year in July, keeping year-to-date inflation at 2.13%. On the foreign exchange front, the Federal Reserve kept interest rates unchanged in July, while the DXY index gained 3%. The Vietnamese dong continued to weaken, pressured by a stronger US dollar, low domestic rates, liquidity injections, and tariff-related trade concerns. Policy and event highlights in July. Some key policies and events that took place in July 2025 include: U.S. tariffs on July 31st. Former President Donald Trump signed an executive order revising retaliatory tariffs effective August 7. Vietnam's rate remains at 20%, which is still competitive compared to peers like India at 25%. However, a new 40% tariff on tranship goods may impact certain trade flows. Overall, this development creates more clarity and could help attract manufacturers to Vietnam. Manufacturing PMI rebound. Vietnam's PMI jumped to 32.4 in July, up from 48.9 in June. This marks the first expansion in 4 months and reflects growing confidence, helped by clearer trade prospects. Credit growth quota rates. On July 31st, the State Bank of Vietnam increased the credit growth quota for banks and encouraged interest rate cuts and similar loan procedures. These moves are aimed at boosting liquidity and supporting the economy in the second half of the year. As of July 28, total system-wide credit had grown 9.64% compared to the end of 2024, signaling strong momentum in banking and real estate. Personal Income Tax Law reviewed. The draft revision of personal income tax law is being fine-tuned with a focus on capital gains, family deductions, and dividend taxation. The aim is to improve practical implementation. Corporate earnings. Earnings momentum picked up pace in second quarter. Aggregate net profits after tax rose 18.2% year-over-year, up from 5.5% in first quarter, and also increased 14.2% quarter-over-quarter. This suggests a solid rebound in corporate health. If we exclude the large banks, along with Vingroup and Vinhomes, earnings growth surged to 24.4% year-over-year compared to a 0.4% decline in the first quarter, indicating a broad-based recovery across sectors. Our view. With U.S. trade policy become more transparent and Vietnam's manufacturing sector back in expansion mode, investor sentiment is improving. We're seeing a strong inflows from both domestic and international investors. Second quarter earning results further reinforce the positive outlook. We believe the market uptrend is set to continue into the second half of 2025, especially as momentum builds for Vietnam's potential upgrade to emerging market status by FTSE. Over the long term, we remain optimistic. Structural reforms, support for the private sector, legislative changes to unlock the property market, and rising public investments all provide solid backing for sustained growth. Still, the risk of stricter enforcements on transshipments by the U.S. remains something investors should keep a close eye on. That concludes the market report for July 2025. Thank you for watching, and please stay tuned for more updates from Kim Vietnam.